Hey everyone, welcome back to Corporate Decoder. Today T.I.N just filed an 8K and I am seeing one red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is facing a potential delisting from Nasdaq due to a missed filing deadline, and this could have serious consequences. Terra Innovatum Global NV, or T.I.N as we'll call them, has a bit of a situation on their hands. They received a notice from Nasdaq, which is the stock exchange where their shares are traded, saying they are not in compliance with the rules. The main reason for this notice is that T.I.N failed to file their annual report for the year 2025 on time. This report, known as a Form 10K, is something all publicly traded companies have to submit to the US Securities and Exchange Commission, or SEC. It is like their yearly report card, detailing their financial health and business operations. So Nasdaq sent them a letter on the 16th of April 2026, basically saying, hey, you missed the deadline. This isn't something to brush off because maintaining listing on a major exchange like Nasdaq is crucial for a company's credibility and for investors to easily buy and sell its stock. Now the good news is that this notice doesn't mean their stock is delisted today. They have some time to fix this. Nasdaq is giving them 60 days until the 15th of June 2026 to come up with a plan to get back on track. If Nasdaq likes their plan, they could get an extension of up to 180 days from the original filing deadline, which would be until the 12th of October 2026. The company states they plan to fix this as quickly as possible. This is a pretty standard situation. Companies sometimes miss deadlines for various reasons, and Nasdaq usually gives them a chance to correct it. However, this event immediately brings to mind past situations where companies that started missing filings eventually faced bigger problems. For instance, when Kodak missed its filings back in 2021, it was a precursor to further challenges and their stock saw significant drops. Similarly, Sears experienced a pattern of misfilings before its eventual bankruptcy. Historically, about half of smaller companies that get into this kind of trouble with filings end up delisted. What is concerning here is that T.I.N also identifies itself as an emerging growth company. This means they might be on a tighter timeline or have fewer resources to navigate these kinds of compliance issues compared to larger, more established corporations. The fact that they're an emerging growth company and are already facing a delisting notice because of a missed filing could signal underlying operational or financial strain. We also see that their ordinary shares with a trading symbol NKLR are listed on the Nasdaq Stock Market LLC. This highlights that their primary listing venue is at risk. The report is signed by Alessandro Petruzzi, who is the Chief Executive Officer. This shows that the leadership is aware of the situation and is taking responsibility for addressing it. While this filing itself doesn't contain detailed financial tables or a deep dive into the company's performance, the information it provides is critical. The core story here is about compliance and the potential risk to the company's listing status. Missing an annual report filing is a serious indicator that something isn't running as smoothly as it should be behind the scenes. This could be due to internal accounting issues, staffing problems, or a general lack of resources to meet regulatory demands. For investors, this is definitely a red flag to watch. The market might react negatively to this news as it increases uncertainty about the company's future liquidity and stability. Right before I sign off, the research tools I use to track these filings are linked in the description. That is my take. Stay decoded. If you found this breakdown helpful, give it a like and subscribe for more. Join our Discord community for deeper discussions, linked below.